Time to fuel your business success. Welcome to Harmonious at Lunch. We're bringing you bite-sized advice and expert conversations to drive clarity and growth 5 days a week. Make sure you join our Facebook group at humanopt.com/lunch, where listeners like you and our guests hang out so we can find harmony in business together. If you're building a business, you're in the right place. Let's dive in.
How do you manage the side of business that's the most unpredictable, the human emotional element? That's what we're talking about today with a unique perspective and maybe a fun little spin on it. We're talking about the psychology behind how elite Wall Street traders manage their emotions and how you could take that and take it to your business so you can keep your emotions and your business in check at the same time and build a thriving business. Anmol Singh, welcome to the show and thank you for being here.
Oh, thanks for having me. Looking forward to chatting with you.
I am incredibly excited about this conversation for a number of reasons. First and foremost, I invest heavily in crypto and I fully understand how emotions can get the best of you. And I also consult with a lot of business owners who are similar to our audience, 7, 8-figure businesses, and making decisions without emotions is very, very complex and often difficult. So give me your background on how you consult with Wall Street traders. I know you do that yourself. That's your background. Where did you get into this sort of emotional, psychological side of what you're doing?
Yeah, absolutely. I started, into the stock market trading when I was like 18 years old. I joined a prop firm. For those of you who don't know, prop firm is a proprietary trading company where a company gives you their money and they hire like hundreds of traders to trade for them. And then they take a percentage of everything that the traders make. But then they give the traders the money to trade in the first place. So I started working for a company and kind of worked my way up in that company. And then I was brought on as a coach by the CEO to bring on all the newer hires that were coming into the trading firm and to teach them the methods on trading. So that's how I got into coaching. And then obviously through my own trading, you realize how much trading is all about emotions. Because, I could tell anybody, hey, buy the stock here, sell it there. But then will they hold it till there or will they sell it early, right? Because they see a little bit of profit. They want to take that little profit. And then the stock goes and hits what was a bigger target anyway, but they got out too soon. Or maybe they are holding on to a trade that's clearly going down rather than just admitting it and taking the loss and moving on to the next thing, because there's also opportunity cost. They keep holding. Maybe it'll come back up. And it might come back up, but if it takes a few years for it to come back up, you could have traded back then multiple different trades for that money and already made more than that. So I think a lot of people make those mistakes when it comes to trading is they, it's clearly going down. And rather than, Warren Buffett talks about buy and hold, well, what most people do is buy and hope. And hope is not a strategy, right? Hope is not a strategy. If you're doing it for a living, especially if you're managing money, other people's money, you're responsible to give them the returns. And it's no good at holding on to a position. So I learned early on with my own trading how much trading was all about psychology. Because anybody can learn how to trade. It's the same exact fundamentals, same exact technicals. But then why do some people succeed and some don't? I think the ones that make it are very systematic. They are following a system. So we are trying to be the casino rather than the player. Right? If you go to a casino and you win $1 million, casino's not going to mind. They're going to give it to you. In fact, they're going to say, here's some free drinks, here's a free stay. Keep playing, because they know that their edge, they have this 0.3% edge that the longer you play, in the end, they're going to come out ahead. So that's what good traders try to do. We build systems that it's not a matter of making money on this trade or the next trade. It's all about, okay, a sample size of 100 trades. What do we make? So it's a trading, taking your trading and investing and making it into a system. So that's what I learned early on, and that's what brought me the success. And that's why I coach other people on how to build trading and investing into a system. So it's not about your emotions anymore. You're just following the system. It's about a sample size of larger sample size rather than that one investment.
So here's exactly why I wanted to talk about this. And for those of you listening, if you're like, why are we talking about investing in the stock market on the show? We never talk about that on this show. We're not. How many times have you had employees where you held on a little too long because you hoped they would change? You hoped that trade would become profitable. That's exactly what we're talking about here. It's the same exact thing. It's the psychological principle of how do you set yourself up for success so that your emotions don't outweigh the clear data that's on your screen, that's in your employees' KPIs, whatever those things are. This is absolutely fascinating to me. And yeah, I've also had those same experiences where I've held on to crypto trades for far too long and lost 80%. And then I've also not held on long enough and I could have made a 200% where I only made 50% profit. So it happens in investing, it happens in business, it happens with employees. This is a real conversation where the application is so much more than investing. So Anmol, tell me this. Where do you start with, let's say, a new trader or an experienced trader, whatever it may be? What are the psychological pieces that we have to start with to understand how to recognize when our emotions are taking over, and then of course how to keep them in check?
Yeah, absolutely. I think what you said is so true. It's all the same thing. Whether you run a business, because trading and investing is also an entrepreneurial venture. You have your money in an account, and now you're building a business out of that. So it's the same thing. It's a business. It's an entrepreneurial venture, and any good business will run on systems and data and analytics rather than their emotions, right? Because even a business owner could be like, you know what? We had these Facebook ads running. We ran them last 2 days. Oh, it didn't work. Facebook ads is a scam. We're going to turn it off. No, maybe your offer wasn't good. Maybe the page had some issues. Maybe the presentation wasn't that great. Maybe it needed more video. So there's things we try to tweak. And same thing with trading. Okay, why did this trade not work? Was it a good setup? Was everything perfect? It just didn't work, which happens, right? Because not every investment is going to work every single time. Was it just the luck where the market didn't, agree with us, or was it just a bad setup that I acted on fear of missing out? You finally start seeing a stock moving up and it doesn't meet your criteria, but you're like, oh, everybody's talking about it, it's going to go. Let me buy the stock now. And then you buy it, and then that's the top, right? It comes right back down because you made decisions on emotions. So good trading and investing is all about systems. And the way the system is built is through data and analytics. So you track, okay, if I'm taking this particular setup on a stock or an investment, how did this setup do the last 100 times if I would have traded that? Do I have an edge here, or is it just that I'm hoping? So the data has to back all of that up. And good traders and even good business owners, they'll have spreadsheets of analytics to see how it performed, so they can make tweaks and make adjustments and just constantly improve. It's all about those small little micro improvements that we keep making. Because think about this: like if there's a wall and there's sticky notes on the wall, and you just write random stocks, Microsoft, and you stick it on, Tesla, and you stick it on, right? And now you take darts, you throw a dart, whatever sticky note it lands on, you have to buy the stock. And if you do that, well, you have 50% chance, right? The one the dart landed on, it could go up or it could go down. So inherently, we all have 50% odds, if you think about it that way. So now the way you make trading work is either you get higher than 50%, right? So you make money, or you make the winners bigger than your average loser. And that's kind of what we try to do. Because if I make my winning investment or in winning trade, let's say twice the size of my average loser. So let's say if every loser is $1,000 and every winner is $2,000, well, I only need to be right 38% of the time to make money. And as we just talked about, you can throw a dart and get 50% odds. So if you get an average winner bigger than your loser, you only need to buy like 40% of the time, because 40 times you make 2,000, you made 80,000, right? 60 times you lost 1,000, you lost 60,000. Net, you're going to make 20,000. So that's what a casino tries to do as well, right? Casino knows that no matter how much you pay, at the end of like 100 spins on a roulette, this is what they're going to get, right? So that's what good trader investors try to do. And that's what good business owners try to do when they're running their marketing. You're tracking. What is our marketing producing? Is it bringing in return on our ad spend? Is it bringing us that revenue, right? Do I need to tweak the offer? Hey, what if we change our offer to this? Or what if we change a price point? We increased our odds by 2%. Or what if we varied the video sales letter by X? Then it increased our ads by this. So it's all about data and systems. So that's what good traders do. Good traders are not reading articles online or going on X or Reddit and saying, ooh, everybody's talking about GME or AMC or this coin and I'm going to buy. If you look for those quick wins, you're also going to get those quick losses. There's no edge in that, right? It's gamble. It's basically just a gamble. And good traders, we don't gamble. We do educated decisions based on data. So then we know at the end of the month what we're going to do. It's not about one trade or one investment. It's about a series of them. How do we do overall?
There's so much wisdom in that, in the business application, but also just in general, like not getting caught up in the FOMO, in the TikToks and the tweets, like you're saying. It's if you are sound in your principles in business, in investing, in life, it's much easier for you to stick to your guns, so to speak. So I love what you're saying. Did you though give us an inside look at your investing strategy. Do you throw darts at the wall to hit post-its? Is that a good strategy?
No, I mean, I know that was more for illustration purposes, but sort of like because we'll have a spreadsheet, right? And we say, okay, there's this setup. Technical analysis is what we use, chart patterns. So we know, okay, this chart pattern, for example, has a 63% win rate. So then I know that, okay, even if my winner is the same size as my loser, it's a winning strategy. So then I just keep executing on the trade. Now, part of the game, if it's a 60% win rate, then you're going to have 4 losers. So when you have them, it's not a surprise to us, right? So we can emotionally stay comfortable because we know, okay, this strategy out of 100 trades, I'm going to win 60, I'm going to lose 40. So when I lose those 40, I'm not emotionally going down on myself, right? Or being like, oh my God, the strategy doesn't work. I know that it's part of the system, so I can stay level-headed. Same thing when a winner comes in, I'm not getting overly excited about it because I know it's part of the system. So good trading is I would say it should be boring. If you're having too much fun investing or trading, you're either risking too much money or you are gambling, right? Because that's why you're excited. That's why your dopamine spikes are there, and they will eventually go away. And good trading is all about just executing on a system. So I think that's kind of the way to look about it. It's like, how do we make our businesses, how do we make our trading, how do we make our investing into a statistical viable approach? Because if you track your investments and you say, okay, this strategy is clearly a losing strategy, well, stop doing that, right? Your data will tell you that. And I think that's kind of what good traders try to do, is we just stick to our guns and we just keep executing on the system over and over again. And then we know, okay, we might not make money today. We might not even make money this week, but every end of the month, the law of averages, we're going to come out ahead. So I think that is the good approach to utilize for whether you run a trading or any other business.
I'm glad you brought that up too, because what I'm hearing from everything you're describing is that small business owners in particular don't have enough data. And I say that because you're talking about, okay, you're analyze different chart patterns for their success rates, and you have 63% winners on this chart pattern. Great. You at least have an educated guess going into it. We don't do that as small business owners. Even a lot of big businesses don't have that much data. Like, if we made our businesses that boring, your word, not mine, but I agree with you. If we made our businesses that boring to where we could start a Facebook ad or a Meta ads campaign or a LinkedIn ads campaign, Google, whatever, to where you had a reasonable expectation of the probability of success that you could analyze in real time how you're doing, you would be so much more calm when you're doing anything in business. And I want to, so let me shift there to the mindset side of this. Like, we'll use 63%, right? So 63% win, 37% loss. How do you help people get through, understanding that you will lose 37% of the time on average, right? How do you stay strong and say, even if you have a couple losses in a row, like, I'm in line with the strategy, this is the average, I'm still on track, and not get so caught up in it to a point of just panic?
Yeah, I think it all comes down to the same thing. The more data you have, the better you're going to feel. Because if you only have 3 months of data, well, you never know. Next 3 months could be different.
Yeah.
But if I have like years of data, right, 5, 10 years of data, and I know that over the last 10 years, these ratios hold up true, that there's no surprises. Then I know exactly what to expect. I know exactly how many losers to expect. And I know exactly, pretty much down to like $1,000. Like, I know exactly what I'm going to make at the end of the month, right? Because it's very predictable once you have a system. And any good business will have those systems, right? You go to a Walmart, you go to a 7-Eleven, right? The big businesses that are doing it, they're very analytical based, right? So you can go to like, I have a friend of mine, he owns like 10 7-Elevens, right? Stereotype Indian, but it's like 10 7-Elevens. But he'll know that, okay, if I place on my store in Manhattan, right, on near Central Park, if I put Monster beverages, for some reason, Monster beverages sell really well there. But then if you go to Long Island, New York, on those stores, instead of Monster, people seem to buy Red Bulls. So in that store, you'll see Red Bulls. In Manhattan, you see Monster. Why do they do that? Well, because they know their audience. They know their customer. They know what is being sold. And then they also program everything to such a detail where you're walking through the checkout lines. They know people are going to pick up a lip balm, the small little trinkets, hand sanitizer, right? They sprinkle these things right on the checkout line because they know that it's a numbers game. 100 people go to a checkout, right? 10 of them are going to pick something up, 10%, right? So they know their odds. That's why all of those things are crafted very meticulously, right? And every successful business will do that. And that's how you stay emotionally, calm about your decisions, is through the data, to know your data, and a long enough sample size too, right? A sample size of 1 month, no good, right? Sample size of a few years, very good, right? And it's going to be within that 5 or 10%, even the next year, if those have been tested correctly. And I think the reason why most people don't do that is because, growing up, our parents are telling us what to do. And then you go to school, your teachers are going to tell you what to do. Then you go to college, your professors are going to tell you what to do. Then you go get a job, your boss, your supervisor, your manager is going to tell you what to do. But now when you're running your own business or you're trading or investing, it's an entrepreneurial venture. Nobody's going to tell you what to do, right? You have to tell yourself the right thing to do is every single day. And that's how success is created. You taking ownership and accountability and telling yourself what to do every day. Nobody's going to come over your shoulder and tell you this is your task list for today. As an entrepreneur, you got to wake up and say, okay, this is what I'm going to work on. These are the needle moving things that I need to work on in my business. And I think the same thing applies with trading or investing. Is just a larger enough sample size to make educated decisions on, because nobody knows where the stock is going to go tomorrow. Nobody knows where it's going to go. But we do know if you take 100 of those exact trades, this is what we're going to come out ahead. And that's what we call an edge. Just like a casino has an edge, you need to have an edge in your business. If you buy a product, for $10 and on your retail store, you sell it for $15, well, you know your margins and you know at the end of the month how much you're going to make, if you forecast that. So I think the more people can start thinking in terms of data and systems and decisions, the less emotions will play into your decision making. But if you don't have any data, if you never tracked anything, if you're running a business, you never collected any receipts or what the customers seem to purchase, or if you have an online business, where do people click on your website, where do they click away? Like knowing all those things is how you optimize any business. So I think, and then emotions have no place because you're literally going by the data.
Yeah, it's so true, and it's just the opportunity to get better and better on a daily basis. I'm curious. I'll ask you this question, then we'll wrap this episode up. It just popped in my head though as you were talking. Um, you have a lot of people who are traders, and I see this in salespeople too. And this is kind of where this question is coming from, where you get addicted to the dopamine, and you talked about this. I think it was before we started recording, but in investing, you get the same dopamine spike as doing drugs, sex, all these other things that are probably not so good for you, but bad sources of dopamine. I mean, um, do you find that in taking that and making it into a more boring, predictable process, that people actually lose the passion for what they're doing? So investing in your case, but I've seen this in sales. Like if you give people a format and a structure to operate within, they get the dopamine from the risk of yes or no, right, for the sale. And when you make that boring and predictable and they have averages to hit, they lose the excitement, and the passion behind it just kind of fades. So that's the first question, is do you see that? And then the follow-up would be, if you do, how do you help them fall in love with those little tweaks and optimizing things rather than the big dopamine spike of winning or losing?
Yeah, and I think that's a great question, and you're absolutely right. That is a possibility that could happen. But any good business operating at any level operates on data and systems, right? Because when you rely on, feeling good about your business or feeling good about your emotions, then what ends up happening is you're on the hook for that, right? You got to basically always perform, and when you don't perform, those averages and those systems will let you down, right? And the way I handle is I tell, okay, let's say a salesperson is having a bad day. He's like, you know what, this month wasn't good. I was trying this new thing, it didn't work. I'm like, well, if you just keep trying what we already talked about, then at the end of 3 months, this is what you're probably going to make, right? And it's predictable. So right now, if you operate on art, whereas you try to do things your own way, then, well, yeah, you could either crush it or you could fall on your face and not hit any of those numbers. But if you just stick to it, yeah, you might not have a great month, but at the end of 3 months, 6 months, 12 months, you're going to be exactly where you should be. So I think that is what you need to look into, is like, do you want the predictable income where every quarter, every 6 months, every 12 months you're crushing it and you're hitting your numbers? Or do you want to try it your own way? And now you might exceed it, but you also could fall on your face. So do you want that uncertainty? And I think some people are really good self-starters. They like a little bit of that. So you kind of feel that out. You allow them a little bit of the art to tweak it. So you can allow them to go off script and, go do the things that they want to do, or, test out. But they still have to hit the systems where you still have to hit a certain number of calls. You still have to hit a certain number of follow-ups. So you can control the process where you have to make a certain amount of calls, certain amount of follow-ups, certain amount of reach outs, ask for referrals. You still do all of that. Now, how you do it, I could leave that up to you, as long as you hit those numbers, because then we can see our system shows out of 100 calls, you're going to get this. So if you fell behind that, well, let's just go back to the system, right? So you're going to hit it. But I'll let them try it out for a couple months, because maybe they find some new way that they're better at, and then we can somehow incorporate that into our business.
Yeah, it's so spot on. Great advice, and I appreciate it. So we're gonna wrap this episode up, but you have a pretty cool offer for our listeners. Why don't you tell me about that?
Yeah, definitely. So I'd love to give your listeners a free copy of my book. They can just go to go.unmol.net, and they can just cover shipping wherever in the world you are. I'll be happy to send out a free copy to you. And that book covers my 10 success principles that I live by, that I apply into my daily life. And it's a book that I wrote for myself like many years ago. And then when I actually applied that, I got the success in my life. And now I turned it into a book for other people to get from. And one of the things we already talked about, which is being a person of integrity, which is do what you said you're going to do and do it when you said you're going to do it. And just think about how much our quality of life would be different if we did every single thing we said we're going to do, and we did it when we said we were going to do it, right? That's the foundation of success, because a strategy is only as good as your ability to execute on it and follow it. If you never apply it and never execute on it, if you never stick to it, you're not going to get the results. So that's a lot of the things that I go about in my book.
I love it. That's awesome. And if I'm correct, success principle number 3 was listen to Harmonious at lunch every single day. Was that, did I read that right?
Yeah, well, there's one of the success keys was continuous learning, which is always be learning, always be evolving, because the markets are dynamic. They keep changing. So if you stick to the marketing principles in your business from the year 2010, it's outdated. So you always got to stay, ahead of the curve.
I love it. Well, maybe success tip number 11 then is specific. That's the bonus tip. I appreciate you coming, Anmol.
Oh, thank you. Thanks for having me.
Wherever you're watching or listening, the link is on the screen. It's in the show notes down below. Go grab yourself a copy of the book. That's an awesome offer. You just got to cover shipping. Thanks so much for listening. I hope you enjoyed this episode and really spend some time thinking about this. We talked about a lot of different things about investing, air quotes, but we definitely talked about your business if you heard it the right way. So go apply these principles. Go run your business like a predictable enterprise that it should be. We'll see you on tomorrow's episode of Harmonious at Lunch.
Another episode of Harmonious at Lunch in the books. I hope this episode made you think and you grabbed some actionable ideas to propel your business. Don't forget to like, comment your takeaways, and subscribe wherever you're listening so we can help more entrepreneurs just like you achieve harmony in their life and business. For cutting-edge tools that bring clarity to your people and processes, check out humanoff.com to download our app today. See you next time.